Let's take a look at Bitcoin and the cryptocurrency markets today, as well as some other news. We've had a little bit of price action today. The stock markets opened up fairly strong. We were up as much as 500 points at one point today. And here we are. It is about 3:12 p.m. Eastern Standard Time, and we're losing strength going into the close. And the stock market has been slowly leaking the Dow, the NASDAQ, S&P over the last few days and the last couple of weeks. And that's kind of how it works. It kind of sneaks up on you. You get a couple of down days and you might have a green day, but the key is the close. If you see weakness or strength into the close, that'll tell you a lot about where the market really is, where it stands. In the past, with the Fed put, with everybody knowing that the Fed was going to back the markets up, any kind of dips were instantly bought up. We saw a little bit of that this morning, but no follow through. And that's what is concerning. And that is what a sign of the new trend is follow through on that morning opening. And other signs of the top, Peloton is now halting production of its bikes and treadmills because demand wanes. Peloton was one of the darlings of Wall Street. Their stock went on a big run. The insiders sold nearly $500 million worth of their stock before it dropped. So when you see insiders selling, when you see Washington elite selling, when you see members of the Federal Reserve Board selling, that tells you the market's peaked, the market is top. So the markets, by all intents and purposes, by all signs and signals, the financial markets, conventional, traditional markets have all basically peaked for this cycle. As long as the Fed is not going to pump liquidity back into the market and keep the rates low. So we're going to find out really soon what the Fed is planning to do. Chair Powell is speaking next week. So we will see how strong he's going to be on inflation and what we can expect. A lot of it's baked in, but if he comes out really strong, we're going to see even more downside and even more deleveraging continue. We're going to see that anyways, but if he comes out really, really strong, takes a hard stand on inflation and surprises people, you'll see a big dip in the markets again next week. Let's take a look at Bitcoin again on the daily chart. Yesterday, we were kind of hovering a little bit. We're still in that range, kind of trading up and down in that 40. I mean, we wicked down obviously to 39.3, but in that 41.2 to 44,000 range, we're kind of bouncing along in here. And the big question is a lot of people are talking about right now on the different channels and the different technical analysts. And I'm not a technical analyst. I'm not a chartist. I look at the charts to kind of look at price action, price patterns, because this is the psychology of the market. And, a lot of these are algorithmic trading algorithms and bots. So patterns do repeat. And you see a lot of the similar type price action we saw. This price action here kind of look a lot like this here, this distributive top. So not exact, but you see kind of the same sorts of things going on because of the way that the algorithms are set up, and the hedge funds that are doing high frequency trading and trading across exchanges. They have if this, then that kind of scenario set up. So this price action, a lot of it is retail human emotion, and a lot of it's just machines that are executing trades based on different technicals. And that's why technical analysis is important, is because a lot of these trades are based on technical indicators, moving averages, things like that. But what was interesting was this death cross study that we've been looking at in terms of how many days from the peak until we got the cross being the exact same amount of days. I find it interesting, doesn't really mean anything, but I just find it interesting that we had the exact same amount of days from the peak to the cross in both of these tops here. So we'll see how that plays out. A lot of speculation. If we are seeing not exact price action, but similar kind of thing over here that we saw in this area. And we had a little bit of a bump today. I know a lot of people got really excited, but remember over here in this range, we had about a $10,000 range here. I mean, this was 30 to 40,000 for quite a while. And then it tightened up into that, $31 to $35,000 range until it finally bottomed and moved on. So this is a pretty tight little range here where we've been trading basically in the 41, really in the 41 to 43 range. We did bump up to 43.8. This has been a much tighter range than over here. It's more in looking like this area here. So we could be closer, to rounding over and reaching a little bottom point. And I think the consensus is from a lot of the analysts out there is that we need one more little capitulative event before we can really bounce into that retrace where the altcoins, should start their run and we can get into that altcoin season that everybody's looking for. So that's a little bit on Bitcoin today. A lot of the cryptocurrencies, altcoins, some of those have run, some of them have dropped 90%. So those are kind of all over the map right now. The different projects are doing different things, but a lot of the big coins and the big layer ones are following the Bitcoin price action a lot. You can kind of, especially if you go into the hourly, you can see it. Here's Bitcoin. Then you have Ethereum going to Solana. I mean, they're almost identical price action. So what this tells you is that this is a lot of trading algorithms here. It's a lot of whales, institutions, and algorithmic trading going on when you get the exact same price action across a lot of different assets. This was a little bit bigger pop out of crypto.com coin today, but same sort of price action leading into it. Cardano, a little bit of an anomaly because of the news with Sushi Swap. That's why Cardano pumped. And now, buy the rumor, sell the news is what we're seeing. Sushi Swap is supposed to go live today, or not Sushi Swap, but Sunday Swap is supposed to go live today on Cardano. So that's what all this was about. Now we've dropped. Matic had its big news and, ran up, and we've been downhill ever since. But this price action today is very similar to what we're seeing across the space with all of the big coins, the layer ones. Some of the dinosaur coins are following the same patterns, things like that. So Proppy, that's a new coin. PRO, that's Proppy. It is a digital tokenized real estate platform. This is their coin that just released on Coinbase recently, and had a big pump and then a big drop. So you see a lot of that in new coin releases, especially when they hit Coinbase, when the big bulk of the retail traders that aren't on a lot of the other platforms can get involved. So this was crypto.com, where they had their little, that was the CRO coin we looked at, crypto.com. The crypto.com had a security breach and lost, I don't know, $30-40 million of account holder money. They're apparently making that whole. But one of the interesting things that in the news today is that another Bitcoin spot ETF has been rejected. I know a lot of people are expecting to see a Bitcoin spot ETF this year, and most of the industry experts don't think that that's going to happen until we get a lot of regulation. We get more, clarity on Tether and some of the other stable coins out there. I know Gensler has been looking into those things. There's a lot of speculation about Tether and Celsius and a lot of these, USDC coins, Tether coins, things like that, what they're backed with, and their claims that they were initially backed 1-for-1 with dollars, and they're backed by commercial paper, things like that. So one thing to understand is what kind of commercial paper are they backed with. So what's happening is people buy these tokens, they buy Tether, they buy USDC, so that they can use that on other exchanges that you can't use dollars on because of banking regulations. For a lot of people that are trading where they're not supposed to be trading or can't. And a lot of these platforms, that the only way you can trade is using Tether. So they'll take their dollars, exchange it for Tether so that they can buy and sell cryptocurrencies. And then what Tether will do and what Celsius will do is they will take some of that cash, they will keep some of it in cash in the banks, but they will take the rest and they will invest it in other assets to earn yield. And some of those assets that they invest in is commercial paper, which is basically a loan by a company. And depending on the grade of the paper, you get higher rates for lower grade commercial paper, you get lower rates for higher rated commercial paper. And for instance, Michael Saylor, a lot of people know what Michael Saylor did. He issued corporate bonds to buy Bitcoin. That's commercial paper. So for all we know, Tether could have bought some of their debt. Chance, maybe not, but that's what commercial paper is. And on the subject of Michael Saylor, borrowing money to buy Bitcoin, that was pre-Fed policy change. So you will not see a lot of those types of things happening now that the Fed put is off, now that they are no longer going to be pumping liquidity into the markets and the rates are going to be increased. You're going to see a lot of those types of things and opportunities go away. So that's just some of the general news that's going on out there that, could have something to do with price action today. But the key is, where is Bitcoin going to go next? And right now, nobody knows. It could shoot straight up from here, like we saw if we go back and look at what happened back here in July. It looked like price action was going to continue down towards the 20,000 range. And all of a sudden it just reversed and went straight up for days and days and days. One of the longest streaks that it had without a down day. I mean, that very well could happen. And we could be at the beginning of that right now. This candle right here looks a lot like that candle right there. So we very well could be in that mode, but you have to remember, this was Fed put back here. This was easy monetary policy, lots of liquidity coming into the market. So a very different time. It was risk on this whole way up. This was all risk on into both of these tops. Now we are risk off. We are de-risking, meaning investors are pulling capital out of risk assets. Now they're still playing, as we can see today. They're still getting in and out of some of these coins and things like that. But for the most part, it is risk off right now, especially until we hear from the Fed and what exactly they are planning to do and what kind of stance they're going to take on inflation and how aggressive they're really going to be. So that's a quick Bitcoin cryptocurrency market update. Just keep in mind, as you're, especially if you're newer in the market, Bitcoin is not going anywhere. It can go down. Sure, it can go down 80% like it's done in the past, but it can also go up. A lot of the altcoins and other cryptocurrencies is where you have to be careful, because some of those will go away. Some of them don't have any underlying businesses behind them. Some of them do, but you have to remember, those are emerging technologies. Those are nascent assets, new technologies. And a lot of times technologies become obsolete very quick. So you need to understand what you're investing in. If it's long-term, how viable that business, that protocol, that project, or that opportunity is long-term, whatever space it's in. I know there's a lot of buzz around metaverse, gaming, NFTs, and those types of things. And those are very trendy. And those trends will change very fast. So you need to be keeping up with that and understanding what those trends look like, because the altcoin space is basically venture capital. You make a bunch of bets, hopefully some of them will pay off. You're in a down cycle right now, so it's very different than it was when the market was going straight up in terms of those investments. A lot of those altcoins are going to lose 80–90% of their value. Some of them may never come back. Some of them might come back. We don't know. But we do know that, technology often outpaces itself, and newer technologies become obsolete very fast. So you have to be careful there. But Bitcoin is a different thing. Digital property, digital gold. I look at Bitcoin like I look at real estate in terms of an asset, a property type asset, whereas I look at cryptocurrencies like I look at companies. I'm an investor. I'm not a technical analyst. So what I do is, I buy and sell businesses. I start businesses, scale them up and exit them, invest in real estate, develop real estate, things like that. So I look at the cryptocurrency space from that viewpoint. Cryptocurrencies are like businesses to me. Some of them have income. Some of them are real companies. Some of them are just tokens. And then Bitcoin is digital property, to me, a lot like real estate in terms of scarcity, in terms of demand, things like that. It's a demand-driven market, and scarcity can drive demand to a degree, but every market has its peaks and valleys. Every market has its ceiling and its floor. So you need to understand where the floor is, where the ceiling is, so that you can understand your risk reward when you're looking at these assets to invest in them. So that's kind of how I look at things. That's a little bit of an update today. I'll see you on the next video.